All right. Good morning, everybody. Oh, yeah. Happy Thursday. 6:30 a.m. Central Standard Time on a Thursday. We are a day and a half about away from the weekend here in the States, anyway. And what have we got on tap today? It's been a busy week. Been quite the week. Kind of post State of the Union address speech. Okay. We had that the other day. We've had a good, 36 hours of trading activity since. So let's take a look and see what we got. Let me get my charts up and running. I am in one trade today that I got in last night. Last night. So let me pull my goodies up here. Let's take a look from a top-down approach, see what's on good old Yahoo Finance, any headlines that we want to be looking at. Stock futures stall as Wall Street weighs NVIDIA results. They did, of course, beat their earnings yesterday at the end of trading. Let's see what else we got. Oil industry. Okay. NVIDIA. Yeah, a lot of NVIDIA stuff I figured we'd see on there. Unfortunately, NVIDIA is not one of the assets I have on my challenge account. I have two challenge accounts and one funded account, but on my Ola Prime challenge account, it's a 100K account. It actually comes with 25 of the top large cap stocks. That's included inside of the Forex challenge account. So all the greats, 6 of the 7 Mag 7, except for whatever reason, NVIDIA is not on there. So unfortunately, I can't even trade it. But nevertheless, just look and see what we got up here. Yeah, not really anything that pertains to me. Financial juice over here. U.S.-Iran talks to resume later today. That's one of the headlines. What else we got? Got some crypto stuff there. I just trade Bitcoin. I don't really get into all the other altcoins and such. Not at this time, anyway. When they start behaving like fiat currencies, price action-wise, perhaps in the future. But as of right now, I just stick with Bitcoin. I used to dog Bitcoin quite a bit just because it used to be so crazy volatile. And it still is, but at least it's behaving a little bit more like a fiat currency, guys. So because of that, I'll look and trade Bitcoin whenever it's running. But right now, it's just been going straight sideways for quite a while, as you all know, probably. So I'm not really too interested in it. Plus, Edge Finder's not even giving us any bullish or bearish signals over here. So we'll just ignore that for now. Yeah, they did have one talk over there in Geneva, U.S.-Iran. It was a 3-hour talk. So you would think, hopefully you could get some headway, make some headway in a talk that long, okay, between the delegations. So we'll see how that all turns out. Pray for the best on that. We don't need bombs flying around all over the place, guys. Okay, can we all just get along, sing Kumbaya, right? Instead of throwing bombs at each other. So that's the whole goal here. What else we got? Anything that is important for us? Kiwi dollar down to 59.80. Solid growth, but limited RBNZ repricing. My mouse is acting up again, of course, guys. I don't know why. It just doesn't. It just has spots where it just doesn't want to move, and I don't understand why it's doing that. It's annoying. It's very annoying. Structural headwinds, silver, RSI stabilized above 50. Upside bias builds. Okay. Yeah, pretty well neutral readings on some of these currencies featured as far as Edge Finder goes over here, guys. Oil still at the top. U.S. oil, very bullish, +9 score. Dollar yen right behind it as far as most bearish currency pair. We'll take a look at that. Copper, that's on the list as well. It's not a metal I have again I don't have that on any of my brokers, so I just stick with gold and silver, which are getting obviously neutral scores right now. Still got some Aussie pairs on there. They've been kind of lingering around. Aussie Kiwi, Aussie CAD, Aussie Yen. Still kind of lingering on. And then the Aussie on the other end. as far as a quote currency pair, Euro Aussie shorts. Nice bearish score on that. So yeah, we'll take a look at some of these euro dollar pairs, or excuse me, euro based pairs. Euro is kind of chilling in neutral territory. So it's not like the euro is a super weak currency over here or anything. What's going on, Zambezi? I'm wonderful today. I have by the way, guys, I'm gonna be on for just 1 hour today because at the time I normally end my sessions, I've got I guess you could call it an interview. Okay, I got a financial analyst / content creator job that I applied for the other day, and which obviously fits seamlessly with what I do, with the content creation I do for my daily shorts, for my my Sunday watch list videos, and obviously my streaming. So just looking to get some extra income on the side, guys. But I sent in that video and answered their 4 questions the other day, and it sounds like they must like me because they've pulled me in for an actual, final interview. So we'll see how that goes. That's going to be at 8 o'clock my time. So again, here in about an hour, 22 minutes. So I'll just be on today till 7:30 my time, 7:30 CST. That way I've got a little bit of time to kind of prep and get ready for that. So wish me luck on that. That would be awesome. I'm trying to get my bills taken care of, guys. Okay, you got to get like a regular job because all my money in the accounts are obviously wrapped up in my trading accounts, right? So we'll see how that goes. I'll let you know how it goes tomorrow. But anyway, what else we got today? Let's see. President Trump flapping his lips at all. Has he said anything of note lately? Guys, as always, it's a good idea. Like him or hate him, it's a good idea to see stuff that comes straight out of his mouth. Yeah, right now he's doing a lot of endorsing of potential representatives. So that's basically what his wall is kind of flooded with of late. Talking about all the primaries, the polling, and everything. So that's nothing of real importance to us, other just some of the normal complaints and things. So yeah, nothing of real note there. Looking over here on X, I like to just kind of take a quick second each day to see if there's anything major, going through here. Oh, by the way, it's kind of funny, guys. Scottie Pippen, so he used to obviously play with Michael Jordan on the Bulls and all the championships. It's kind of interesting to see that he's investing now, and I know he's investing Bitcoin. I just thought it was kind of funny because like a lot of people are kind of dogging on him in the comments when he posts things, because it sounds like he might have posted or reposted something from somebody else. And I think people looked at it like he was pretending it was his own analysis or something. People just want to complain. So anyway, it's interesting to see Scotty from the Chicago Bulls in there. His son, by the way, Scottie Pippen Jr., plays guard for my Memphis Grizzlies over here in the NBA, in the National Basketball Association. So I like to watch his son. He plays really well. He really does. So it's kind of cool to see for me growing up as a kid in the 90s, obviously I watched Scottie Pippen and the Jordan and the Bulls all the time. And it's just interesting to see full circle how now I'm watching his son and he's on my favorite team, Memphis Grizzlies. So interesting stuff. But anyway, what else? Anything else of note on the top? Bill Ackman, he likes to get in there and talk quite a bit. Trader Nick, that's my guy right there. Okay. Guys, if you don't know, Trader Nick's got all the socials. Okay, X, Instagram, I think TikTok as well. So if you guys prefer looking at social sites like that, you can always follow him there. Everything links back to his YouTube page, obviously, where I get on there and stream with him. Ola Prime, the company I worked with, okay, where I live streamed on their channel when they had a 6-month project going on there. CME, what's the Chicago Mercantile Exchange hollering at? Talk technical issues. What the hell's going on? CME, futures options markets were halted. Oh, okay. Technical difficulties. That's not something a trader likes to see. And that right there, just that reason in itself is a reason why you should always have a stop loss. It's funny to see 2026, we still got people trading without stop losses. Okay. That right there is a classic reason. Technical difficulties. Last thing you want to be is in a trade and you can't get out because of something like that. Okay. Technical issues. So anyway, yeah, nothing. I'm not really seeing anything on here except for a bunch of complaining. So we'll just get rid of that. What's on the tap for the Forex Factor calendar today? Well, we do have our weekly unemployment claims coming up at the bottom of the next hour, where the U.S. is expected an 11,000 unemployment claim increase, which obviously is not good. Okay. We just were kind of getting our footing with employment numbers of late. Let's go take a look over here at the heat map for the U.S. dollar. My nose is itching like crazy today. If we look at these bottom six, we can see we're basically half and half. So half of these reports have been bullish, half have been bearish for the currency and for the stock market over as well. Good things like the unemployment rate, the jobless claims, the non-farm payroll, which we had an awesome number the previous time back on February 11th, where we had 130,000 actual jobs compared to the 66K forecast. So when that report came out, it kind of like evened things up for the dollar to where we weren't so bad in the red. I mean, a lot of these were red, quite red up until recently, having the jobless claims bullish, the NFP was bullish. So it kind of balanced things out. So now we're looking at jobless claims numbers for going the other way, right? 217,000 again is the forecast. It's not showing the forecast here until it updates later on, but yeah, anything higher than that would obviously turn this red again. Okay? So that would put the employment numbers overall back in the red. In fact, I can go over here to the dollar on the asset scorecard, which is one of the newest features that Trader Nick has created on the Edge Finder, and we can kind of get a little more grain, a little more in-depth look at it, a little more grainy look. And actually over here, there's 5 of the 6. It's actually 5 of the 6 featured. So over here, okay, we are getting a bullish reading for the jobs market. And again, that non-farm payroll was the biggest reason why. So looking pretty good on the 5 major reports that he tracks over here on the asset scorecard. So as far as dollar goes, yeah, bullish jobs, neutral inflation, bullish growth, and bullish on the institutional level. Hey, the smart money buys and sells, the percentage change, week to week percentage change, and then technicals, not to mention very bullish. Okay. So the US dollar overall is looking good. If you look at your daily scores of the dollar, okay, we were back here on, what was that, January 29th. So basically the end of the month, we're all the way in the bearish. We were -7. And then for the month of February, we've just steadily grown, steadily went up. So it's looking pretty good. If we're just looking at all the technicals and isolating just the US dollar, right? So it's looking pretty good. But anyway, back to the top setups. Let's take a look at some of these. And actually, we'll look at my open trade I've got right now, euro dollar. Okay, so that's the one I've got open. Let me get my chart up and running over here. Come on, open up. Come out with your hands up. Euro dollar, here we go. So over here on the euro dollar, just starting from a top-down approach, it's kind of hard to see, but if we look at our 8 exponential moving average, it is below the 21 EMA. Okay. So the 8 is the faster one. That's the dark red. The 21 is the light red. So the goal, if I'm trying to short this, is the 8 has to be below the 21. So we're good there. Not only that, but obviously my edge finder is giving us a bearish -8. So it's only one more point of weakness away from very bearish. But 8s, I like 8s. I like 7. I like -7s or below. Okay. And just like over here, I like to see 7s or higher. That's just my personal number. just to ensure that, if one report goes against the narrative, then it still remains bearish. Okay, that's kind of the way I like to see it. I'll still make trades, obviously, on 5s and 6s, or -5s or -6s, but I'll just be a little more careful with the risk, if that makes sense. Okay. The point is to always trade very, very strong or very weak assets, so that they can and keep them in the trend. As long as the trend is in line, the trend is your bend until the trend is your friend until the bend at the end, right? So anyway, we're good there. So now I just need to simply go down to my smaller time frames and see what kind of supply zones I've got on a 4-hour. Okay, there is my 4-hour. Okay, so that's my 4-hour. And then, but for the sake of the executing time frame, guys, I'm looking at the 1-hour. On the 1-hour, I've got to have my light blue, which is my 50 EMA. Hey, these are a little slower. Okay, it's a little slower than the trend-based EMAs, which was the 8 and 21. So over here, I want to be utilizing slower exponential moving averages, so that we can actually get the pullbacks to those moving averages. So 50 is below the 200 EMA, which is basically the execution moving average. Okay, that is confirming that we are still in the downtrend, but we are getting retracements. We are getting a premium price to short into. Remember, we want to sell as high as possible. We want to sell for the most expensive price we can get, with the anticipation of price going down and collecting that profit, right? Those profits. So retracement to the 200, by definition, by rule, just need a simple piercing of the 200, and then a 1-hour close bearish. And then from there, break a structure from that bearish candle to the downside is the entry. But for me, I don't only go by the 200 EMA piercing of it. Okay, I want that to all take place in a supply zone. So in this case, I just personally had to wait a little bit longer, because unfilled orders, okay, consolidation zones, that's where those unfilled orders are to be able to push price. So just because it hit the 200 EMA, for me personally, for my set of rules, does not say to go ahead and execute the trade. I still got to wait for it to go a little higher into supply. So when we got into the supply zone, I was basically looking at that candle right there, that 1-hour candle, because now we're on a 1-hour chart, which is a confluence inside of the 4-hour supply zone, which is obviously the rectangle, right? So I got to isolate, I got to find confluence. And for me, it's the 4-hour, 1-hour specifically on this chart. So I've got the 4-hour trader's eyes looking at the price, the zone, but now I've got the 1-hour trader's eyeballs on the same zone. And in both cases, we're getting our fair value gap. Okay. Fair value gap showing that supply heavily exceeded demand and created an inefficiency in the market. So here's our inefficiency right here. That's the gap. So by rule, price has to travel through the gap to the unfilled orders on the other side, which is the supply zone. Okay. So just for the sake of not putting a whole lot of rectangles up, obviously this is the supply zone on the 1-hour that I'm talking about right here. So when price enters the supply zone, like it did right here on this candle, okay, now I need to see a bearish candle. Bearish candle. So I ended up getting this red bearish candle, which turned into a bearish engulfing candle, did it not? Looks to me like we got pretty well an even top or a double top, but the close closed lower than the previous bullish candle. So you get all these gains, but then the sellers step in and said, oh, hell no, hell to the no, we're going to push it down. Okay, and then we get that close below the low of the previous. That right there, that bearish engulfing candle, That's a good entry signal when everything else matches up. Remember, this is one big puzzle. So for me, in my set of rules, this right here completed the puzzle. When I got the change in momentum, because think about it. From down here, the momentum was up, right? From this swing low. So swing low to current price is up. So that's an upwards momentum. So I have to see a break in the momentum. And just so happens I get the break in momentum in my supply zone. And it's a bearish engulfing candle as well. So the trade is to enter on the next candle as we break downwards. Okay. So for me, when I happen to see this trade, it was obviously on this candle, and actually it wasn't on that candle. It was on this candle here. So when I got into this trade, this candle, this green candle, I was looking at a couple things. Number one, I've got a bearish engulfing candle. Number two, the candle right after it tried to push upwards, but then the seller stepped in. So at that point, I'm seeing a lower low just if I'm looking at those two candles. Or lower high, I'm sorry, guys. So here's a high point, and then here's a lower high point. This is a nice bearish candle because, and let me turn my drawings off just for a second, it'd be easier to see. Okay, talk about this candle. This candle closed at the bottom of the range. Bearish, you could even call that an inside bar candle. Right? This candle fit inside of this candle, right? That's what you call a inside bar, inside candle, which is a momentum changer. Because we had an uptrend or an upswing, but then we have the indecision candle. Well, it's not really an indecision candle, but it is when you compare it to the previous candle. So when I got into the trade, it was actually on this candle as price was down in this area, breaking the low. Okay, breaking the low. So that's where I initiate the trade. And then you see it kind of rolls over a little bit, finally gets that push downwards, and now we're just kind of doing whatever. So nothing I can do now except just sit back and wait, let it do its thing. It might go sideways like this for a while before dropping. So we'll see. The way I see it, today's Thursday morning. I've got about 30 hours left before the market closes tomorrow to just let it do its thing. The only thing I can do is step away and not be my own worst enemy here and try moving the trade around. So anyway, that's euro dollar. And as far as a take profit, basically on this one, I'm looking at the lows down here. So we kind of created this green, where I drew this green rectangle. I just basically kind of connected all these wicks and low points. It's kind of a support. So I basically have a take profit right about here. Okay. And if I go to a 15-minute time frame, you'll see why. Or actually a 10-minute time frame. 10-minute time frame. I'm basically keeping an eye on this candle right here. I got my stop here because if I zoom into this point, that take profit which is a buy to cover order, is just ahead of this demand zone. Talking about this candle followed by the strong push up. Okay, unfilled orders in that area, right? So when price comes back, hopefully in my favor. Uh-oh, is my screen off? Gosh dang it. How long was my screen off? Let me get it back. Damn it. I was just going through a good setup too. All right, we're back up. Gosh dang it. All right, about that, guys. We're up now, it looks like. But anyway, just to finish this part out, we are looking at a take profit down here. Because of this demand zone. Now, a lot of people will put, take profits, you know, at the bottoms of these swings. But for me, I often put them a little higher up because I want to take into account the closest strong demand zone that could potentially, you know, get price to bounce in and then bounce the other way, right? We don't want that. Take away all the unrealized gains. So that's why I'm looking at that zone down there as a take profit. So basically, if I draw it out, my trade looks like this. Oh, actually, I've drawn it up already. Now, let's just redo it. Yeah, just like that. But remember, I got to get out of this trade. I got to get out of this trade ahead of this demand zone, 15-minute demand zone, okay? Because history doesn't always repeat, but it does rhyme. And if we've had all kinds of pushaways from down here, what's the likelihood we could get another pushaway? Right? We come down here, we bounce in, we could very easily come back to the top. We've already seen it. So for me, I don't want to get wrapped up in that. I just want to take advantage of what the market gives. And the market very easily should be able to give at least this amount. Okay. And another reason I don't want to be too greedy on this trade is because a little bit more recent in time, talking about Friday, this past Friday, we actually bounced into this higher demand zone confluence, this higher time frame. This is daily 4-hour demand zone over here. Okay. We bounced and wicked in right here. So, you know, it's even a little bit on the aggressive side as it is, just because we bounced there. Okay. We bounced into that confluence, got a big push up. Now, we broke structure here, but we wasn't able to go any further. We kind of came up here closed and then just completely gave back a lot of it. So that gave me a little bit of confluence whenever I saw we had a strong like rejection, strong push away, a strong counter to the bouncing into this demand zone down here confluence. So that's why I'm giving this one the time of day, and also heavily influenced by the fact that we're getting such a bearish score. So that's my trade on that. Hopefully most of that, hopefully you got to see most of that before my screen went blank there. Damn it. Hate it when it does that. Turn off the old space heater. It's getting hot. But anyway, what else we got, guys? If you guys have anything, let me know. I got a half an hour left. Again, guys, if you came in a little later, I'm only in for one total hour today. So I'll be off of here in 30 minutes. Got to prep for a interview. All right. Which starts in 1 hour, actually. 1 hour or so. Let's look at some oil. Let's look at some U.S. oil. It's giving us the most bullish signal, the highest signal on the charts. Where are you at, oil? You're hiding from me. Here you are. It's rolled back around, it looks like. Okay, U.S. oil, we got uptrends. We got 8 EMA above 21 EMA. That's confirming bullish strength, along with Edge Finder bullish score. We are kind of coming down into this. Let me see. Do I want to call that a daily demand? Let's look at this candle here. This is a daily chart. Is that candle right here a daily demand zone? Well, we did have a gap above it. Let's color that yellow. Maybe we had a gap above it, our fair value gap, talking about the top of this candle to skip the leg out and go to the bottom of the next candle. That's by definition a fair value gap, right? On a 1 day time frame, a daily time frame. So let's go dig a little deeper into this yellow box and see what we got. You guys already can see that I've got a zone drawn up. So let's go see what time frame I did that on. Okay, it's going to be the 4-hour time frame. So there we go, guys. We got a 4-hour daily demand zone confluence on oil with a pretty good discount. Okay, that's a very nice discount. So that automatically becomes my favorite highest probability spot. It's as close to the bottom of the origin of this overall strong move up as it possibly can be. And actually, I'm just going to redraw that. Whenever you draw rectangles over the top of other rectangles, it takes the color away from the original one. So there's my 4 hour. So that's right. That's where I've got my alert set, guys. And this is where I would be interested in getting back into this trade. Bounce down here, get us a nice bullish close, showing that momentum is shifting, or at least trying to shift. Okay, it's not a confirmation, but that's where we just kind of have to step out on faith and trust our system. Okay, if I get that bullish momentum candle after a strong downwards trend, all right, then that's starting to make me feel a little better about the demand zone itself and catching those unfilled orders. So just looking for a drop back down. We're going to go at that point on a 4-hour chart, okay? Because the higher the time frame, the better. On a 4-hour chart, we'll be bouncing. We'll be piercing the 200. That's the blue dash line, or not dash, but that's the blue line you see there, moving average. So let's pierce that, but just come a little deeper and find the unfilled orders. Place our buy down here after a bullish close. Then we buy the breakout of that to the upside. And actually, I would probably amend that to about right here, because, in fact, I need to delete this. That's an old demand zone. Delete this, delete this. See that candle right there, followed by this strong leg out? That left a gap in its wake, right? So as far as just observing potential take profits, I have to wrap a rectangle around it. There's my overhead supply zone to watch out for. And the Dow looks like hit our zone, so we'll look at that in a second. But this is our new potential take profit, this supply zone. So if price drops, goes into my demand zone, and I get my order initiated, okay, I would look to potentially get out of my trade, take my profits up here, take what the market gives me. Again, a lot of people will get into this trade down here and put their take profit clear up here, which is the origin of the overall strong move. But when you're talking about take profits, yeah, you got to observe the fact that you're gonna have supply zones, demand zones, a little bit closer to you than you might think. So when we get a strong fair value gap like that, acceleration gap, runaway gap, whatever you want to call it, then I got to be aware of what's on the other side. Think of a fair value gap as a door, a game show, if you will, where you open one door, you get a prize. Open the other two doors, maybe they got a super soaker waiting to squirt you in the eye, right? You don't know. It's kind of like Russian roulette. So the fair value gap represents the door. Well, you don't know what's on the other side of the door. Could this zone, could this area, okay, could that just be weak and you just pierce it easily with your price going in your favor? Or can you open that door and it's sitting there with a super soaker saying, hey, what's up? And then bat you back down the opposite way and take away all your unrealized gains. So we don't know that. We don't know that. So why risk it? Right? Why risk losing all your unfilled or all your unrealized gains, thinking and assuming that we're just going to pierce right through those unfilled orders, okay, and chase a higher take profit? So that's just something to be aware of, guys. You got to be aware of that. Let's see. That's an old demand there. I can delete that. So yeah, that's it. I mean, that's basically my favorite spot. Now I just deleted a zone in this area. So let's go down a time frame or two. 1 hour. Yeah, I was kind of keeping an eye on this area here. Actually, let me think here. Yeah, I would prefer to stick here because there's unfilled orders down here. There's inefficiency in the market. So I could very easily see this just waterfall down. Again, guys, banks prefer, and they often do attack the zone that's as far away as possible while still being within the current leg up. Okay, this is obviously a big higher time frame impulse leg. Okay, isolating this price from here to up here. This represents an impulse leg because it broke structures along the way. 1, 2, 3, 4. Okay. closed above all that. So in the grand scheme of things, in the grand scheme of things, that's really the leg I'm looking at. This is just one big, think of this as one big candle. One big candle. Right? That's one big candle. That's obviously, if we go to a higher time frame, this is probably going to represent one candle. Maybe it's a day, maybe it's a weekly candle, right? So because that's our impulse leg, because we broke structures. Okay. Again, we broke this structure over here. Okay. This structure here, this structure's over here. Obviously this structure a little lower. That's from this impulse leg. So if I'm a bank, turning my drawings back on, if I'm a bank, I want to go as close to the origin of that impulse leg as possible to get the cheapest price, right? The cheapest price. So yeah, while we do technically have some demand zones in this area where we're kind of chewing through as we speak, that is a cheap price relative to where the swing high was, but it's not the cheapest. It's not the cheapest. The cheapest is down here at the beginning on this 4-hour time frame, okay? Because that represents the first fair value gap. Actually, I need to turn that back on. Top of the origin, or excuse me, top of the proximal line to the bottom of the candle after the leg out. Right? Cheaper price. This is a cheaper price, obviously, than up here. It's over 150. It's 150 points cheaper. And it may not sound like a lot, but when we're talking banks and their gigantic orders, GJ, yeah, we'll look at pound yen here in just a second. I'm about finished with oil here. But yeah, when we're talking $100,000 orders, $1 million orders from the banks, there's a gigantic difference from 64.5 to 62.5. That's $2. $2 times millions of shares potentially. They want the cheapest price, and the cheapest price, as far as I see, it's down here. Again, looking at this impulse leg. So that's what I personally am waiting on for oil. Bottom of the daily zone, beginning of the 4-hour zone. So that means we got 4-hour traders watching this price zone, and we got daily traders watching this price zone. It's a pretty good confluence, guys. So anyway, that's oil. I've got my alert set. Nothing left to do except just walk away and check out other items. In this case, pound yen. Let's check out pound yen. Now, pound yen is not giving us a very bullish or bearish score. It is neutral, but it is a +3. So technicals, we're not really getting any help either way. Sentiment analysis, okay, our relationship between smart money and dumb money, that's giving us a little more of a bearish nod between the banks, favoring the yen last COT report and not favoring the pound as much, right? So that's by all accounts a bearish score. But then you got the economic calendar giving us a +5. So on this front, the pound has got the stronger reading, okay, and the yen has the weaker one. Well, that's obvious, because if we go over here to our economic surprise index, remember the yen has only exceeded expectations over here on the right on 33% of its high impact news events. Okay? And it's at the very bottom. It's currently the weakest fundamental currency. The pound isn't really faring any better, though, because it's up here tied with the Aussie for second worst, okay, or third worst, however you look at that, however you define that. Okay. So those two currencies are pretty weak. Now, I wouldn't say the pound is very weak. Again, anything that's in the 40 to 60% range is just kind of neutral. It's when you get below 40, like the yen is, where I would really just be able to look you in the eye and say it's a weak currency fundamentally. But We're pretty close. It's not that far away. Now, and it's interesting too, because the Aussie, if you guys remember, was one of the stronger currencies as recently as like a week and a half ago. Just taking a look down here at the Aussie dollar, which is our purple line. Look how strong it was back at the end of the month, the last month. It was exceeding expectations on 83% of its high impact events. We only had one item going bearish, but then follow that blue line. There you go. Okay. Aussie dollar from 83 down to 66, and all the way down to 50, and now we are at 42%. Does that currency look strong to you? Not to me, it doesn't. And then also let's add in the Japanese yen on top of it. Okay. It's weak too. It's not faring much better, but it is weaker than the Aussie. So that's, that's why it's given us a little bit of a fundamental nod to the Aussie dollar. Okay. So again, that's your 30,000 foot view. This is important, guys, to understand. It's very important to understand the relationship between these three different analysis groups. Okay. Fundamental analysis, sentiment analysis, technical analysis. And know that it's in order of importance as I just listed it. Fundamental is the most important thing you can look at. This is the why. This is what CNBC, this is what Bloomberg, this is what all the executives, the CEOs, the bankers, this is all they're talking about on there. So if they're talking about that and they're not talking about a 5-minute or a moving average crossover, a 5-minute time frame, do you think that we should be paying more attention to fundies? Absolutely. And then obviously the banks are going to do their thing. The average retail trader, like you and me at home on our laptop, okay, we're gonna do our own activity, and that's the contrarian signal. So that becomes the second most important, in my opinion. Technicals are the least important thing. The charts, the least important thing. All that does is helps us time it. So I'll go ahead now that we know it's neutral, but slightly bullish, right? Because again, we are getting such a strong fundamental score. So we'll take a look at the chart. Pound yen. Hopefully that breakdown made sense, guys. I try to break that down regular just so that it slowly starts dripping on some people and you can kind of understand the mindset behind it. So hopefully, I hope that helps out. Let me know if you have any thoughts on that. But yeah, pound yen, here we go. Okay. Long-term uptrend, but we've kind of shifted everything of late. Or have we? Have we? I want to look at a couple things on this. Order block. Looks like we've been respecting demand zones pretty well. Okay, this is a daily chart, but look over here. See this discolored candle? That's because it was a demand zone at one point. At one point, this candle on a daily chart, drawing it up, looked like this. So that was a daily demand zone, right? Price pushed away, left a gap, returned to price, and what happened? It caught a bid from the unfilled orders from that demand zone and pushed up. Okay. What about this one over here? Here's another one. This one might have went a little deeper, though. That was a demand zone. Went a little deeper, but what did it do? It came down to the area. Of course, you got to have your stop losses in there. Price bounced in that area. Took a while, about a week and a half or so, but then it finally pushed up. Now it's on its way to this overhead supply zone where we're currently just peeking into, guys. What got left in its wake? Another demand zone down here. So there's our daily demand zone on the pound yen. And on this one, I can actually color it the normal color of yellow because it has not been touched. It has not been mitigated. So there's your daily demand zone at the bottom, which is the origin of this strong move up. And here's your daily supply zone, which is the origin of this strong move down. So currently we're obviously bouncing in, it looks like, or close to the daily supply, but I have drawn up a 4-hour supply zone within. That's our confluence. So let's go to a 4-hour time frame. Okay. Now we're looking at this candle here, followed by a strong drop. And that's our first fair value gap, ladies and gents. Talking about that spot right there. Now, there is a supply zone-ish looking price action a little higher up. Let's zoom into this for a second. Okay. Right here. But the thing I dislike about this is the fact that this basing candle was all the way down here. And then after the basing, the price opened up and swept up top. So as far as I'm concerned, that looks like a bit of a sweep. In other words, I would have wanted to see this candle. I would have wanted to see this candle up here, guys. I would have wanted to see this candle up here for me to wrap a rectangle around there. Okay. But it didn't. It just it was down here. That wick represents a bit of a sweep to me. And when price did drop out of that zone, yes, it did leave a gap, but then it just got lazy for what, a solid 3-4 days. And the real strong movement out of this zone was obviously right here because it kept going. It gave you about what, 8 or 9 red candles in a row. Right? Thanks, Zambezi. I appreciate it. So this is where the bulk of this drop happens. So I have to look at the origin from here rather than over here, right? So there's a 4-hour supply zone with a gap, the white box I just showed, which is inside of the daily supply zone. So that right there would be, that would be a potential, if we had a bearish score over here on the edge finder, if we had a bearish score, that would be a heck of a supply zone to short in. But we don't. We have a neutral score, but it's almost bullish. So I want to be looking at the demand zone underneath. Okay. Daily time frame, we're getting higher highs and higher lows currently, aren't we? Okay. Now, it's kind of tough to see, but there's actually another demand zone hiding right here. Talking about this indecision candle. You know what? This indecision candle right here. So that represents a demand zone. Now, this is the origin of the strong move up. So I would think this would be the higher probability because it is at the bottom of our curve analysis. But daily, that's about the lowest time frame I go to where I basically look at it as its own genesis, if you will, of a curve analysis, meaning, am I buying low on the curve where the discount zone is, or am I high on the curve, meaning in the supply zone area, the premium area? So daily from the, I'm sorry, guys. Am I on? Never mind. I was on the daily chart. So never mind. Ignore what I just showed you. This down here, it remains the correct daily. I'm sorry. I forgot I was on the 4-hour chart. So now that I know this is the 4-hour, yeah, I'd be wanting to isolate a gap in here. So the gap I see is right there. It's kind of a small one on a 4-hour chart, but that is a gap. So I have to wrap a rectangle around the candle just on the other side of it. And there is my 4-hour demand zone. Okay. Now, I can look in this area where I drew that box up a minute ago and say, hey, okay, this now represents a 4-hour demand zone because I had a gap above it. But the thing I dislike is the fact that we had 1, 2, 3, 4. We had 5 basing candles. Okay, if I'm just isolating the basing candles, that's your basing candles right there. There's 5 candles in there. To me, that's too much time spent before we had the ultimate leg out. So that means that there was just plenty of time potentially for the hedge funds, for the banks, for the trading firms to put in most of, if not all of their order. Because remember, they have to layer their order and they have to accumulate. So that's a lot of time, in my opinion, and relative to the time frame. Okay, that's a lot of time to be able to put in most of, if not all, their order, because they have to slowly do it. They can't put a full order on, otherwise they'll get slippage like a MF. So I don't know that I'm that excited about this as a 4-hour demand zone. Now, obviously things could change on a smaller time frame. So let's drop to a 1 hour. Okay, on a 1 hour. So on a 1 hour, the picture changes just a little bit, and let's just get rid of that. Okay, there's no gap down here. This wick touches this wick over here, so I can't utilize this as a 1 hour demand zone. Not to mention there's too much time spent. Remember, everything is relative to the time frame you're on. So what might look like a lot of time on one time frame might be less time on a lower time frame, depending on the position. So I would basically ignore all this and look at where's my first gap. Okay. Where's my first gap? First gap is from here to here. That's my first fair value gap. So that would mean my demand zone would be this candle here, preceding it. Right here. Because now the picture looks a little different. You got this kind of bottom action here. We had a leg up or leg in, but then you had 1, 2, 3 candles of basing action. That's a little more like it. Now, I personally would ignore the wick on this and stick with just the recent candle, which is there. But you do have only 3 basing candles. Okay, this candle, and this candle. Because this is the leg in, followed by those 3 candles, and then the leg out. So that's why I would look at that as a potential spot to buy. Now, again, it's a +3, so it just needs a couple more strong points for the pound, or it needs some more, just a little more weakness for the yen, even though it's already been beat to hell. So the pound basically needs to get some strength in order for me to be 100% excited about looking at this as a little more of a grade A trade. You know, I might put in a small position on it, just a filler position, and just take it to the swing high. But it's definitely going to be a small percentage of risk, if that makes sense. So hopefully that helps R Schwartz. R Schwartz 6578. My screen's still up. Okay, good. But I'm not that excited about this. I am excited about this down here, though. Okay. I would be excited about this because I've got 2 sets of eyeballs on it. I am going to leave that zone there just to see what happens when price gets down here. But this right here represents my higher time frame confluence. If I use this, though, I would actually like to see the 50 EMA above the 200 EMA. Yeah, in fact, even on the daily, we got the 8 under the 21. So actually, that's another thing I dislike. So if this demand zone were to come into play for me personally, all else being even, assuming we had a bullish score on the edge finder, then I would prefer that price from where it's at choose through this supply zone so that we can get the 8 above the 200 or 8 above the 21. And then obviously drop it down to a 4-hour. Then we get the 50 to be above the 200. If we can get all that to happen, then at that point, I would look for the retracement. I don't think I would feel too comfortable with it the way it is right now. So basically, if I had to draw this out, because remember, we can't fit our rules. We can't force trades, right? The market has to come to us. Far too often, we go to the market. But that's the worst way to do it, guys. The market has to come to us. And if it doesn't come to us, c'est la vie. We wait till the market comes to us, regardless of the asset that you're trading. Okay. Far too many people think that we have to go to the market. I don't know if this is making sense or not, but to me, in my head, it does. Okay. We can't force things is the idea. So if it meets my expectations, I get in the trade. Well, it would have to do some things. It would have to break this structure. Because when it breaks this structure, or when it flies upwards, the moving averages will finally cross over to where it's a true bullish signal on the time frames I'm looking at. So, but in order for that to happen, I need price to continue to rise first and create a better reward risk ratio. It's actually going to do that in the process as well. This ain't the greatest reward risk ratio if I'm looking at the daily. Now, the 4 hour is a little different story, but if price comes up, then I'm going to have my 50 cross my 200 to the bullish side. I'm going to have the 8 on the daily cross the 21 to the bullish side. That's going to confirm the trend on those two time frames. And then at that point, I need a retracement to the moving averages to pierce the 200. Okay, the goal is to pierce the 200. But for me, I'm asking for a bigger discount because the demand zone with the fair value gap above it is showing strength here, that it's showing proof that demand heavily exceeded supply at the origin of this overall strong move up. Bam, bam, bam. So that's how that trade would look if it does what I want. Because if price comes down right now, it's not passing my rules. The moving averages, okay, it's not showing that mechanical flip to bullish strength. Not yet, anyway. So this is the hardest part in trading is patience, guys, and letting the market come to you. Because the market's going to do what the market's going to do. And it may not do a damn thing. It may just come all the way down and just go through everything. Okay, well, if it does, I'm staying safe. Because I have an expectation of what I want to see. So anyway, that's pound yen. I hope that helps. Schwartz. Now, other than that, guys, it's already been an hour. I do have to go ahead and hop off of here because, again, I got that interview here in 30 minutes. So I'm going to see if I can't. I'm going to see if, the funny thing is I enjoy doing that type of work. Okay. I do my shorts. I do my videos. By the way, guys, if you want to check it out, I did actually set up. I actually uploaded a video about the market reactions to the State of the Union aftermath, the 24-hour market reactions. So I just uploaded that. So if you guys want to check that out after I hop off of here, go do that. And then I do my shorts. So anyway, just finishing my thought on the job, though. I don't really look at it as a job because it's stuff I'm doing anyway, because I'm already doing this. I'm already creating content. I'm already making up videos and obviously doing, all the analysis, some fundamental sentiment, technical analysis. So if I'm already doing it, why not get paid to do it? That's the whole goal here. All my trading accounts are wrapped up in the trading account. So it's money I don't have access to. So I have to figure out an income pretty quick because I got 2 months of stash left for my bills, right? So it's high time I get up on top of something. So anyway, that's the goal. But anyway, I'm gonna hop off, guys. Wish me luck. And as far as tomorrow goes, I'll be back. I'll let you know if this euro dollar trade's doing anything. It's in a little bit of unrealized profit right now. Not a whole lot, but we'll see what happens. So with that, peace, love, and chicken grease. Have a great Thursday. Stay safe. I'll talk to you on Friday.